Hello and welcome again. This is Robert Schein, Managing Director and Partner of Blanke, Schein Wealth Management. Thank you for joining us on our Friday Insights edition. Today's topic, inflation. You know, it's a heated debate right now because if you look at the government's index, the CPI, Consumer Price Index, they're reporting a benign inflation number, meaning that inflation is well under control. At Blanke, Schein Wealth Management, what we do with our clients is we listen to their current situation in life, their goals, their feelings. We take that information and we marry that to their financial plan. And then that really dictates, it creates an investment policy statement for us, how much risk they're willing to take on, where the asset allocation needs to be allocated for the investments. And that's really how we invest our clients' capital on a go-forward basis. One of the key things that we constantly have the pleasure of serving clients over the 40 plus years at Blanke, Schein Wealth Management with 3 generations to serve is we've seen multiple generations for years, right? We've had clients that our number one growing demographic right now is the centurion, so the 100-year-old plus client. We have several of those, and that's continuing to grow because people are taking care of themselves. They're minding what their wellness, as well as the longevity factor is kicking in. All of those combined, you also then have underneath us inflation, right? You and I have what's called the CPI-U, Y-O-U, and that's essentially what you spend money on, what I spend money on our kitchen table, and it's relative to everyone and how we all decide to allocate our resources, if you will. And it's different for everyone. But the government basically takes an aggregate total of everything that you can consume in the different sectors and segments of the economy and puts that together and then says, averaging it together, they're saying, no, there's really no inflation. Now, there's interesting research that's painting a very different story right now. Like, I don't know if you knew this, but right now, year over year, on used cars, they're up over 16% right now. Super hot demand. So if you've got a car, you want to sell it, that's another hot demand item right now. 16% inflation on used car market. Who knew, right? Homes, we're seeing inflation in homes. The single greatest purchase that most people in America do today make is purchasing of a home. It's the largest purchase in many Americans' lives, right? And that being said, we're seeing double-digit increases in respective regions across the United States because the inflation is kicking in and the frenzy in real estate is really happening. So there is inflation there. We're also looking at other aspects of where we spend money on, even in the real estate side. If you look within a lumber market inside, again, another 16% year over year increase in lumber. So that's a cost that goes into the home. That's another reason why home prices are rising, especially for new home prices. So all of these in the supply chain across the board, we're even seeing rising in food costs, commodities. And so what do we do? How do we position ourselves and how do we make the hedge at Blanke, Schein Wealth Management? Well, you want to own real hard assets. You want to own real estate. You want to own stocks for sure, simply because they are going to grow ahead of and keep ahead of the pace of inflation. Now, we both know that monetary policy and fiscal policy are gearing us to hyperinflate the economy, right? They're trying to regrow, restart as we're in the wake of the coronavirus pandemic, right? Which slows the growth, stops the growth. So now they have to add more stimulus, they have to add more money, they have to just do a lot more just to incentivize the growth. And that's why you're seeing all this money being spent. Well, if you know anything about Economics 101, it's real simple. When this happens, you do not fight the Fed, you actually flow with the Fed and you pay attention that what's going to lose is cash in the bank, right? Banks will make money on your money, but they're not going to pay you for you just to keep your money. And why that's important, as I said before, well, Money Magazine had the 100-year-old, marathon runner. More and more people are growing older, but being healthier as they grow older, but living longer. So, it's not uncommon for us to see, a 40-year to 50-year retirement for 2 people and having to cover those costs, right? This chart right here shows price changes from 1997 to 2017. So it's a little dated, hasn't been updated for inflation as of right now, because we're going only back to the 20-year period, only to 2017 on this chart. Bottom line, the hospital services, textbooks, and college tuition are by far the highest rated in terms of increase of inflation. Now, with the closes of colleges and the coronavirus and people learning to do schooling online, we could see a correction in all of the colleges, right? In the private institutions. We could see sort of a healthy correction because let's be honest, this inflation rate for colleges and the cost of education, it's not sustainable, it's not acceptable. And that's one of the reasons why we have all this college debt out there is because all of those institutions actually got some money to give to these kids. And these kids really thought that the $250,000 education was really good for a $50,000 job out of college and that they pay it off in the next 20, 30 years of their lives. That math doesn't work. On the other side of that, TVs, right? You go to Costco and you look at a TV, every year the price of a TV, they get bigger, they get better resolution, and they get cheaper, right? So this is all factored with everything in between, with new cars and wages and housing and healthcare and software and cell phone and all that. The government puts that together, that's the CPI, and they're basically saying that there's no inflation. On this chart, the overall inflation rate, if you factor that in with basically a 1% to 2% inflation rate over 20 years, is a 55% inflation rate. So that what that means is that your $1 is now cut in half just about in terms of your purchasing power. That's why you have to invest. That's why we're seeing commodities like the silver and the golds, as we're seeing the real estate market, we're seeing the equity markets. These are all new time highs. And we're also seeing other things out there that are just, trying to stay ahead of inflation because markets are predicting what's happening. And we're going to a hyperinflation mode as to what you and I spend money on. Now, I call it CPIU. At the Schein household, we've got 4 kids in private institutions, and so that's called cost of education, and that means it's very expensive. So we're up here right now, right? We got healthcare we spend money on, and we've got colleges and high schools that we spend money on. So our CPI relative to us is way ahead of the government's read of the 1% to 2% inflation rate. We're not even at 2%. Now, if we look at the last 20 years based upon this, again, if you had that $1 in the bank not earning anything, your dollar is basically cut in half, okay? 50%. So that's one of the reasons why you have to stay ahead of this. We at Blanke Schein Wealth Management spend a lot of time doing so. We spend a lot of time with our clients, basically gearing their portfolios to provide income, stability, and that cash flow that also grows as your needs grow. Because keep in mind, what happens is your same goods and services that you pay for, your services, your utilities, everything that you're paying for doesn't go down. It only grows up. And I will tell you, with the coronavirus now sort of on the horizon, it's on everyone's mind. You will see at restaurants where they have the leisure, in the restaurant market, they have to make up for what lost time that they had. So they're going to have a surcharge built in. You're starting to see that in your bills on everything you're seeing. It's a COVID surcharge, and it's in addition to everything else for these businesses to survive, and that's another thing. So this is another thing I love. I'm going to leave you with you for the weekend. And essentially it says 70-year-old trainer and 102-year-old client. So what's your excuse? So let's get out there. Let's have some fun this weekend. It's beautiful weather. We are, if you're indoors somewhere, over 50% of our clients are across the United States. And I know that there's winter out there somewhere, but stay active, get out there. We've got a 70-year-old trainer and a 102-year-old client right here. What's your excuse? But that's my position to you, is make certain that we're paying attention to inflation that is relative to you, what you spend money on, and how we hedge against that is what we work so hard with our clients with here at Blanke Schein Wealth Management. So thanks for watching. Have a wonderful 3-day weekend. Stay healthy and safe, and we'll see you again next time.